On March 4, 2025, tensions between the United States and China escalated dramatically when China announced the suspension of soybean imports from three major U.S. firms, CHS Inc., Louis Dreyfus Company Grains Merchandising LLC, and EGT, due to contamination issues such as ergot and seed coating agents. Additionally, China halted log imports after detecting invasive pests like bark beetles and longhorn beetles. While ostensibly about quality control, these measures closely follow recent U.S. tariffs on Chinese products, highlighting deeper geopolitical frictions. Soybeans are a cornerstone of U.S. agricultural exports, with China historically the largest market, purchasing billions of dollars worth annually. In 2024 alone, U.S. soybean exports to China were valued at approximately $14 billion, making up over half of the total American soybean exports. Thus, China's import suspension represents a significant economic threat to American agriculture, particularly affecting farmers across Midwestern states such as Iowa, Illinois, and Minnesota. This move is not without precedent. During previous trade conflicts under the Trump administration, China implemented tariffs that drastically cut soybean purchases, severely impacting U.S. farm incomes. Farmers faced shrinking profits, prompting massive federal bailouts to mitigate the losses. This cycle may now repeat itself, potentially increasing reliance on government aid programs, thus placing additional strain on taxpayers and the federal budget. Moreover, the ripple effects of this suspension could extend far beyond soybeans. Agricultural businesses that depend heavily on exports to China might face inventory surpluses, leading to decreased prices across various agricultural commodities. Equipment suppliers, transportation providers, and rural economies reliant on farming income could also experience downturns. Log imports from the U.S. are also a critical component of trade, supporting timber industries across the Pacific Northwest and southern states. China's import ban threatens not only forestry workers, but also the broader communities dependent on timber exports. Economic distress within these sectors could deepen regional economic disparities, potentially igniting political pressures domestically. Additionally, this action could encourage China to diversify its sourcing, strengthening ties with alternative suppliers like Brazil and Argentina. If this shift becomes permanent, it could fundamentally restructure global agricultural markets, reducing U.S. market share permanently. To address these challenges, American agriculture may need strategic diversification. This could mean exploring new international markets, investing in domestic processing infrastructure, and enhancing crop versatility. However, implementing these solutions requires significant time and capital, and farmers could face years of uncertainty and financial instability in the interim. Furthermore, as political tensions between the U.S. and China remain high, agricultural trade will likely remain a key pressure point. Farmers, politicians, and economists will closely watch developments, emphasizing the importance of diplomatic resolutions to prevent ongoing economic damage. Ultimately, China's suspension of soybean and log imports illustrates the intricate connections between agriculture, global trade, and geopolitics. It underscores the vulnerability of American farmers in the face of international disputes, highlighting the necessity for robust, forward-thinking policies that protect U.S. agricultural interests. The coming months will be critical in determining whether this action marks the beginning of another long-term trade dispute or merely a temporary setback.